Insurance. Half of the people hate it, and the other half who love it are insurance agents. Insurance will always have a bittersweet place in everyone's heart. You will hate paying for it, but you will be super glad that you have an insurance when you need it. Hi guys, welcome back to my channel, Kelvin here. In this video, I'll be talking about insurance. And no, I'm not trying to sell you insurance. Just give me 1 minute of your time to do a short survey. Say every insurance agent ever, while you try to siam away while not looking at them. In this video, I'll be sharing what kind of insurance are out there, which you should get, and of course, how to save on insurance money. There's a lot to talk about, so let's jump right in. Why do we need insurance? If you play Dota, or basically any 5v5 game out there, you know how important it is to have a defensive item. If you go all offensive, sure, you'll deal a high damage, but just a 1 or 2 hit from an enemy will KO you. Life is a box of chocolates. You will never know what you're gonna get. Sometimes it's food poisoning, other times it's cancer or an accident. And when it happens, will you be able to afford your medical bill? There's a saying out there, it's cheaper to die than to fall sick in Singapore. True story. Let's look at some scary numbers. If you are around 15 to 64 years old, there's a 9% chance that you will be hospitalized, and when you are hospitalized, it will cost you at least $200 a day in a public hospital. $200 is a lot of money. Just stay on for a few more days and you will be able to afford a new flash speed router. Moving on. 1 in every 4 person in Singapore will get cancer. The bill for treating cancer is at least $8,000 a month. If you can afford it, that's great, Mr. Nigerian Prince. But for all the rest of us who can't afford to pay, we will need insurance, because it will act as a defensive item to our wealth, like plus 100 wealth protection. If you buy insurance, you will have hope when anything happens to you. As the saying goes, you might, you see one. Man, I'm starting to sound more and more like an insurance agent now. Let's talk about the different kinds of insurance out there. I will start from the easiest to the hardest. Health insurance covers all the expensive hospital bills and outpatient bills. So let's say for whatever reason you enter the hospital, like an accident, food poisoning, stomachache. If you have this insurance, you can 白吃白喝 or eat and drink for free. Like I mentioned just now, every year there's a 9% chance that you will be admitted into hospital. Luckily, if you are Singaporean or PR, you will already have some sort of health insurance called MediShield Life. But even with MediShield Life, you will still have to fork out a large amount of money. For example, imagine this is your hospital bill. First, you will need to pay a fixed amount called deductibles, about 1.5k to 2k depending on the bill. Then after that, you will still need to pay part of the bill, anywhere between 3% to 10% up to the maximum amount. Anything extra, you will still have to pay yourself. You can see why a basic MediShield Life is not enough, because if anything happens to you, it will easily wipe out a few months of your savings. There are many companies to choose from. You can check out the comparison here at CD, link in description. Personal accident covers you if you get into any kind of accident. So let's say if you are playing basketball and sprain your leg, or maybe you are playing PlayStation and sprain your thumb, then you can claim from an accident insurance plan. Pretty simple. Those were just the mild cases. For more serious case like a car accident, or what my insurance agent like to say, lose an arm, lose a leg, or lose an eye kind of accident, then an accident insurance will be useful. Because when these kinds of accidents happen, you will likely be unable to work for weeks or even months, and the payout from this insurance will be able to offset your expense while you recover at home. You can compare accident insurance plan at CD, link in description below. Life insurance is meant to cover 3 things. First, critical illness like heart attack, stroke or cancer. Second, total permanent disability, which means that losing 2 parts of your body function, like 1 arm, 1 leg, or 1 eye and 1 leg. It is meant to replace your income while you recover from a critical illness. For example, if you get a heart attack or stroke, then you will unlikely be able to work for months or even years. In this case, you can use the payout from this insurance to pay for your life expense while you recover at home. The third function, insure against death. Even though sometimes you can say to the god of death, not today, but death is always unexpected. If you have a family dependent on you and you died, they will be in a huge financial trouble unless you have life insurance that pays out a lump sum to them when you die. Life insurance is the most complicated insurance out there because there are so many options to choose from. But don't worry, I will summarize them as simple as possible for you after you help to tap the like button to support the channel. First, you have the term life. So what the term means is, it will cover you up to a certain age. So for example, if you want to be covered up to 65 years old, then you get term life up to 65. Or if you want to be covered up to 85 years old, then you get term life 85. Now, the cool part about term life is, the earlier you sign up, the cheaper it will be. For example, if you are a male non-smoker, if you sign up at 30 years old, you'll be paying about $900 every year. But when you sign up at 40 years old, you'll be paying about 1.5k every year instead. So that's term life. Pretty simple, you get covered till a certain age. The second one is whole life. Unlike term life, whole life covers you up to 100 years old. But you may ask, what if I live past 100 years old? Then you must not get cancer after 100 years old lor. Jokes aside, if you think you'll live past 100 years old, the Great Eastern Insurance Plan will cover you your whole life, even up to 1000 years old. But that's great for you if that's the case. Now, the special part about whole life insurance is, you only need to pay a certain number of years. For example, 20 years. After that 20 years, you no longer need to pay, but you will still be covered your whole life. And because of that, whole life insurance will be more expensive than a normal term life insurance. For example, if you go to compare first and see the cheapest whole life insurance, you will have to pay 9k for 20 years, about 100k in total. But if you take term life, you will only need to pay $900 till 65 years old. In my case, I need to pay about 30k in total. Now, same like term life, the earlier you buy whole life plan, the lesser you have to pay. That's why you should sign up for life insurance as soon as possible, like in your 20s when you start working. Here's the tricky part about whole life insurance. There's something called multiplier. How it works is this. While you are paying for your life insurance, it will cover you the full amount. For example, if you are paying for 20 years, then it will cover you 500k for 20 years. When you no longer have to pay, your coverage will drop by a multiple, like a multiple of 5. For example, your 500k will be divided by 5, and you will only be covered 100k for the rest of your life. Now, this makes sense because for the first 20 years, you are still young and still working. Your family is still dependent on you, your child is still young, and you do not have much savings. So the high coverage is needed. But after 20 years, your children have all grown up and have started working. And hopefully, you have already saved your retirement money. Even if anything happens to you, the burden on you and your family is much lesser. The third kind of insurance is Investment Linked Plan, short for ILP. This is the ultimate insurance out there. Half of the people hate it, and the other half who love it are insurance agents. Just kidding, but it's true. Just search on the internet and you will see a lot of people asking if they should cut their ILPs. So anyway, an ILP is like what the name suggests, an insurance plan that has an investment linked to it. The premium that you pay for ILP, part of it will be deducted for your insurance cost, and the balance will be invested in some mutual funds and grow. And due to that, the premium for ILP is cheaper than whole life plan for two reasons. First, at later years, you will rely on the investment portion to pay for your insurance. And second, it doesn't cover you your whole life. It will only cover you as long as it can deduct money for the insurance cost. Here's a few reasons why so many people hate ILP. The first, investment portion. As you all know, investment carries a certain risk. In the worst case scenario, when you are nearing retirement and is relying on the investment portion to pay for your insurance costs, if the market crashes, you will be in huge trouble because you will have to fork out more money to cover the balance. The second reason, premium increase. Unlike term life and whole life, where the earlier you sign up, the lesser you have to pay. For ILP, the insurance cost will keep increasing over the years, eventually eating into your investment portion. For example, this was my ILP insurance cost. You can see it rising steadily every year. Despite all the negativity about ILP, here's the good part about ILP. Number 1, premium holiday. Because there's an investment portion to deduct money from, you can stop paying your insurance premium for a while and it will still cover you. Number 2, flexibility. Unlike all the other plans out there which you only get what you paid for, ILP allows you to modify your plan. For example, if you want to decrease your critical illness coverage and increase your accident coverage, you can just do it without having to top up any money. So it's totally up to you which life insurance you should choose. But here's a guideline to help you choose. Get the term plan if you want to save on insurance costs and you know how to invest for retirement. That's because when your coverage stops after you retire, your hospital bill will be covered by your health insurance, and any other extra expenses like medicine, therapy, and maid can be paid for by your investments. Get the whole life insurance if you do not really invest your money. That's because if you get critical illness after you retire, the insurance will still pay out a lump sum to you to cover your medical expense. Get the IRP if you want the flexibility to modify your insurance and do not mind the increasing insurance costs later in life. And also don't mind the risk of your investment portion crashing when you are near retirement age. But my advice is stay away from IRP unless you know what you are signing up for and you know how to play around with your plan. How much coverage do you need for your life insurance? The general rule of thumb out there is you should cover 5 to 10 times of your salary. Like if you earn 60k a year, then you will need 300k coverage. That's because if you have critical illness, you will need 5 years to recover and you won't be able to work in that time. Or maybe death, the 300k payout will be enough for your family to live on while they find another way to survive. Those were all the main insurance out there. Of course, there are more like disability insurance, which pays out a money income to you when you are disabled and unable to work. But the 3 ones that I mentioned are the main ones. It is better to get all 3 of it if you can afford it. But if you cannot afford all 3 of them, at the very least, please get the health insurance because it will offset your hospital bills and other costs like outpatient treatments. Oh yeah, here's 2 more tips for you. First, do not sign up for an insurance just because you are pressured by your friend or your relative to do so. You must fully understand what you are signing up for. Second, get an insurance agent that is reliable and you can trust. The best way is get a referral from your friends. Because if you get an insurance agent that is unreliable, he won't be there when you need him the most. Or even worse, he will jump ship to another insurance company when the payday is higher, leaving you with another insurance agent who you don't know anything about. If you need a good insurance agent, I will put my insurance agent contact in the description below. He is super reliable and is very patient at explaining stuff. And no, this video is not sponsored by him or his company. I just like sharing good stuff with you guys. And that's all for this video. What kind of insurance you have? Let me know down in the comments below. Like, share and subscribe as I'll be posting new videos every Monday. See ya!